need to have a talk. Markets are so focused on a Bitcoin spot ETF that now they are missing the bigger, more important macro elephant in the room. In this video, I will not let you go without knowing what is going on. Are we heading head first into a horrible recession in the middle of a Bitcoin halving year? What could this mean for our excitement going into this year, and how should it affect our stance for crypto? I'm going to break down my research and a lot more. If you appreciate these videos on a daily basis, smash the likes. Do not forget to subscribe. We've got a growing, really passionate trading community in our Telegram group, ijazcrypto.com/TG. Link is in the description. I want to see many of you guys in there sharing knowledge, talking, chatting about charts. I share my analysis as well. We're going to make that one of the biggest and most proactive crypto trading communities. Now, guys, I want to focus on this. Yesterday, we had the FOMC minutes, and Jerome Powell came out talking about lower inflation risk, and he's concerned about being overly restrictive, right? We know that the FOMC at that last meeting where these minutes are from had spoken about at least 3 rate cuts in 2024. So this is the year we're going to finally start seeing rate cuts, and we've been rejoicing that, right? Overall, we know that a loosening of monetary policy, i.e. Jerome Powell and his friends printing more money, is generally good for investments, is generally good for our risk on assets such as crypto. But there's one glaringly obvious pattern which many are missing and most are overlooking, partially because they're so focused on the Bitcoin spot ETF. I'm going to break this chart down in detail because we need to take a look at something. If you look at the US markets, NASDAQ is down another 0.25% today. That's the 5th session in a row now, and they're having a really slow start to the year. Now, why do we think that's happening? Part of that is because naturally, if you've come off your New Year's break and you've seen that the NASDAQ and crypto is super up over the last couple of months of 2023, what's the natural position to take? It's a short. So we've got a natural amount of short interest in the market at this point. But there's something a bit more deeper. And what that deeper sentiment is that markets aren't silly. Markets understand that when somebody like Jerome Powell comes out and says, there's lower inflation risk, there's concern about overly restrictive policy, they translate that in their head. And what they understand is that means that the Fed could have simply gone too far. We just over an hour ago had the labor figures. I tweeted this at Ijaz1, and the jobless claims came in at 202,000 versus 220,000 expected jobs. The labor market is softening. Inflation is coming down. Inflation risks are lowering, right? So normally what the Fed do is they historically have a habit of only loosening monetary policy when they've already broken the economy and we're running into a recession. And that's exactly what this chart shows you. If you take a look at the blue line, I want you guys to focus on the blue line there. The blue line I'm showing you here is the interest rate, the US interest rate, which we always monitor. Right? Now, every time you've seen an inflection point to the downside, I want you to look at how the red line, which is the dollar index, which we monitor a lot here on this channel, and the yellow line, which is the S&P, react to the rate cutting cycles. The gray area represents a recession, okay? These gray strips here represent a recession. So in the 2000 cutting period, you saw that towards the back end, we saw a recession after the rate cutting cycle. If you look at the 2007 rate cutting cycle, you saw that led to a recession through the 2008-2009 global financial crisis, a really long, pronounced recession, right? A deep financial crisis. If you look at the 2020 pandemic-induced one, you saw that also led to a recession as well during the rate cutting cycle. So the question now being asked is, are we going to see a strip of grey here? And how long is that grey going to be? Is this just a cutting cycle to prevent a deep recession? Because the Fed have always shown that they cut rates too late, right? This is them doing it too late. They could see the Titanic is heading towards an iceberg and they try to steer, but it's too late. We're in a recession. And so history has suggested we always hit a recession. Now, you can make a couple of arguments, right? You can make an argument why this year might be different, why this situation, this rate hiking cycle might be different. You could say the economy is healthy, Jerome Powell is managing to steer a safe landing, but still we have to understand that this is a very big possibility. we could be heading into a recessionary period. Now, I want to point out one more thing. When you see that the dollar index does well, when this red chart moves to the upside, that is historically when it's not good to be in risk-on assets. Okay, so you wouldn't want to be in the S&P and you wouldn't want to be in Bitcoin, right? You need the dollar index to move down. We always need that, right? So when you want to take a look at this, like this is okay. After we came out of the recession, the dollar index did go down, and this was a great period of time, right? Low interest rates and dollar index moving to the downside allowed the S&P to go ahead and climb, the yellow line here. That's great. But what we need to focus on is here. When the rate cutting cycle started, how did the dollar index initially react? This is an upwards trend through the recession, right? Because you plummeted into a recession and the dollar index actually showed a lot of strength. Very important. Similarly, look at here. During this period here, rates cut here in around September of 2007. You started your rate cutting. Look at the blue line start falling. Interest rates came down, drove us into a recession. You can see the gray shaded area. We're now in a recession. And what happens in a recession? Look at the yellow line. Boom, down. S&P, downside. Dollar index, the opposite, climbs up. We need to focus on these areas because if we do get driven into a recession, dollar index will spike, S&P will struggle, Bitcoin could struggle due to the recessionary and the risk-off appetite going on. Now, of course, there's other things we have to tack on top of that. You have to ladder on the fact that we're expecting a Bitcoin spot ETF. You have to ladder on the case that we've got a programmed Bitcoin halving in there as well. These are things we have to take into account. But history has shown, and I just wanted to share it with you guys, that it doesn't just mean that you start celebrating as soon as you get rate cuts, right? If rate cuts are not done right, and if Jerome Powell's left it too late, which we're going to find out, the proof will be in the pudding, we could be in a recession. Now, it doesn't mean it has to be a long recession. It could just be a short one, right? This one was much shorter than this one. This was obviously the global financial crisis, and the COVID pandemic one was quite short as well. Maybe it could be a short one. And after the pandemic, we generally do a lot better, right? You can see the S&P did really well after this recession, right? After this recession here, S&P went on a crazy bull run after 2010 all the way to 2021, right? It just went crazy for that 10 years of a boom cycle. So it's not that it's going to last forever. You just have to be cool so you do not get caught off guard, right? Really, really important. So when we jump back into the Bitcoin chart, I mean, look at the situation we're in right now. I mean, we had our crazy dump yesterday based on manipulation. Hopefully you guys weren't caught off by the manipulation, right? Yesterday's video was obviously based on the manipulation which created the dump in price action. But the day before, I said, watch out. There's an imminent dump coming from Bitcoin spot ETF manipulation. And lo and behold, the next day, the market tanked. And you saw this on the 5-minute chart. Look at this tank yesterday. Horrible, horrible fall to the downside. Fortunately, however, Bitcoin's doing great. I mean, if you take the measured move from the lows and you kind of extend that to kind of where we're at now, let me just do that for you guys so you can see. You're going to take it from that horrible wick to the downside, apply it roughly to where we're at, and we've recovered, right? 8-9% recovery here, back to a nicer position here on Bitcoin. If we zoom out a little bit onto the 4-hourly chart, you'll start to see where the battle's being fought. And so we're still here in sideways action. If you look at the EMA ribbon, which I like to use, you can see neither the bulls or the bears really own it. We kind of rose above it, tanked below it, now retesting from the bottom side. If we can reclaim it, that's good sign to move ahead. But more interesting is this. All that panic, all that FUD, all that manipulation yesterday, what did it really cause? Apart from a bunch of liquidations, I think there was $500 million worth of liquidations in 4 hours yesterday, just even more reason for you guys to avoid leverage. If you're part of our trading community, you guys know I take spot trades, I don't take leverage, I only go long as well, and I've still generated over 370% spot returns in December. I've shared all my trades so you guys can see it transparently. I've got nothing to hide. I've been trading for a very, very long time, right? Apart from leverage, what else happened? Nothing. It's just a retest of the EMA ribbon. So if you look at it and you ignore the wicks, you've actually got higher highs, and you've actually got a high, right? You've managed to create this here and you create another one there. Big deal, right? Bitcoin's looking quite strong in the great scheme of things. And so now we're trying to bounce from EMA ribbon. This is not to be worried about. Expect manipulation. If you're inviting TradFi into the markets, what do you expect? They're going to want to come in on their terms. I've said this time and time again. Do not be shocked by manipulation. Crypto is the one asset you do not have excuse to come in and be like, oh, the volatility got me. You know what you're doing when you come into crypto. You know you're trying to trade and invest in the most volatile asset class known to man. nobody can claim they don't know this. So do not get shocked by days like yesterday, where you have a day candle here, which ended up being down 4.6%. It's not a crazy day here on Bitcoin. I mean, if you just go back here, you're down 5.8%. What worried people and messed people up is the wick. And why do wicks bother people? Because it hits your stop loss and it liquidates your leverage positions, right? That's why people don't like wicks, because in the great scheme of things, look where it closed. The candle closed all right, but it was just the fact that it went down to 40,600 and then recovered to 42,800, right? It wicked out a bunch of people yesterday. So when we look at this in the great scheme of things, nothing to be worried about, right? If you managed to catch it here in the bottom of the wick, which I didn't, I would have loved to DCA around that 40.5k mark, right? Really nice area to DCA here in this wick. I didn't manage to catch it. I didn't have any limit orders set. Cool. Now, if we zoom up to the weekly chart, look at this. This is what you're crying about? This is what you're whining about? This is what you're feeling nervous about? The fact that Bitcoin is still up 3.5% this week? Give me a break, right? Bitcoin is kind of going in a little bit of consolidation. But like I've said time and time again, this is extremely strong price action, right? The fact that Bitcoin is now sat here in the vicinity of that 44,000 mark is hugely strong. Now, naturally, there's going to be resistance. I don't expect Bitcoin to just, rocket straight through every single resistance level. No, we know here on the daily level, for example, 45,200 is very, very difficult. You have to ignore all my crazy lines on this chart. But that's a very difficult level at 45,200, right? We know it's not going to be easy. So it's going to take time, maybe a couple of attempts to break through 45,000 and then onwards up towards 48. Now, the real question you need to ask yourself is, what are you doing? Are you going to take action in the market? You're doing your research, you're understanding crypto, you're building conviction, but what are you doing? Are you just being entertained? Are you just watching? Are you actively DCAing? Are you trading the markets? What are you going to do? Because we know the suits are now locking and loading. We know they're coming into the market, and the landscape of this market is going to change. Could this be the last powerful bull market we get before it becomes institutionalized, before it becomes really slow and mundane and full of bureaucracy and the percentage returns start falling and leverage starts to leave the system? Could this be the last explosive bull market you get to really change your life in crypto? You've got to take action. ijazcrypto.com/TG. Join our crypto trading community, and I hope to see a bunch of you guys in there. Thanks for watching, and I'll see you in the next one.